And in the U.S., stock index futures pulled back ahead of Wednesday's open as the Federal Reserve's policy meeting draws to a close. Around 5:45 a.m. Eastern Time, Dow futures dropped 40 points, indicating a decline of 34.19 points, while S&P 500 futures indicated a relatively flat to negative start to its session. Nasdaq futures, however, rose following upbeat earnings out of the tech sector. Wall Street seeks winning conclusion as first quarter earnings season continues today with Restaurant Brands International, Sprint, AMC Entertainment, AutoNation, General, Telsa Motors, T-Mobile US, Square, Wayne Results, Yuan China, and Fitbit all due to report. In economic data, ADP employment figures are scheduled for release at 8:15 a.m. Eastern Time, and Manufacturing Purchasing Managers Index at 9:45 a.m. Eastern Time, and ISM Manufacturing Data and Construction Spending at 10 a.m. Eastern Time. Investors will pay close attention when the Federal Reserve delivers its latest policy decisions at 2 p.m., concluding a two-day Federal Open Market Committee conference. And in Asia, stocks closed mixed today as investors digested headlines related to a months-long trade dispute between the U.S. and China. The Nikkei 225 advanced 0.86%. Over in South Korea, the Kospi gained 0.51%. Chinese shares moved into negative territory as sentiment took a hit from trade headlines, while investors digested the release of a private survey of Chinese manufacturing activities, which met expectations. The Shanghai Composite fell 1.81%. Meanwhile, Hong Kong's Hang Seng Index spurred early gains to slip 0.54%. Elsewhere, Australia's S&P ASX 200 hovered both above and under the flat line before eventually closing lower by 0.07%. And back here, ArcelorMittal South Africa unit swung back to a modest profit in the first half of the financial year, boosted by higher steel prices and upbeat sale volumes. Diluted headline earnings per share for the 6 months ended 30th of June 2018 is 5 cents per share, compared with a loss of 148 cents per share a year ago. This was in line with the company's expectations for the first half of 2018. The company, majority owned by ArcelorMittal, said profits improved despite a constrained South African economy and a relatively strong average rand-US dollar exchange rate in the first half of the year. ArcelorMittal South Africa unit said it was investigating further initiatives to address the group's sustainability, including the sale of its 50% stake in trading and shipping company MIHBV. And Rwanda's government has said that it will seek new markets to export its clothing following President Donald Trump's announcement on Tuesday, July 31, that his government has suspended Rwanda's right to export clothing duty-free to the United States. The decision came after Kigali's decision to increase tariffs on imports of used clothing and footwear earlier this year.
The move, initially threatened in March and confirmed on Monday, was seen by many in Washington and Africa as foreshadowing how the Trump administration planned to apply its America First trade ideology on the continent. Claire Akamanzi, CEO of the Rwandan Development Board, told reporters on Tuesday that companies producing garments for export were already approaching European buyers.
Yes, we expect some Rwandan companies to be affected, particularly C&H. We have a plan for them. We have engaged them, we've discussed with them, and we will be helping them with the transition to new markets. We already know one of the investors in clothing is already looking at European buyers, which has already sent samples to Europe. And so we have a facility that we put in place to help them within the transition to find new markets. And that support is going to include some of its financial support to pay for some of the cost they will incur to adjust to new markets.
Kenya, Tanzania, Rwanda and Uganda all increased duties on used clothing and shoes in 2016 to nurture their local textile industries. But in March 2017, the Secondary Materials and Recycled Textile Association, SMART, the trade group representing U.S. used clothing exporters, filed a petition arguing that the increase violated the African Growth and Opportunity Act, AGOA. Though they contested SMART's assertions, Kenya, Tanzania and Uganda backed down and agreed to roll back the duty increases. But Rwanda refused and as a result joined the ranks of Canada, Mexico and the European Union and China, all of which have been targets of Trump's aggressive trade tactics. Kamanzi says the government would assist affected companies financially, though she declined to give details.
When we look at domestic production of clothing, we've actually seen evidence that it has grown, which means that there is a correlation between discouraging second-hand clothing and increase in domestic production, which was the basis of the decision that we made. So it's actually, the evidence is actually showing that it's paying off. So we should just stick to growing our domestic production, which is what our leaders decided at the EAC when the decision was made. The second point that I wanted to also add on that is Rwanda remains very open to engaging the United States as well as any other country on mutually beneficial trade engagement.
Despite the suspension, Rwanda will maintain its other duty-free benefits under the African Growth and Opportunity Act, AGOA, America's flagship trade legislation for Africa.
And after the break, Africa's baobab tree turns big business. Details in a moment. Do stay with us.